You see a headline about some massive bank scam, right? And it's easy to just scroll past, thinking it's some complicated financial story that has nothing to do with you. But what if that's just the splash? Today, we're going to follow the ripples from that fraud. And trust me, you'll be shocked to see just how far they travel, touching everything from our own wallets to the health of the entire economy. So let's trace that impact. Just look at this number for a second. 22,845 crore rupees. It's a staggering amount, isn't it? That's how much financial fraud was reported in India in just one recent year, according to the National Cybercrime Reporting Portal. But as huge as that number is, it's really just the initial splash. The real story, the one that affects all of us, is in the ripples it creates. So, to really get this, we're going to follow that ripple effect. First, we'll look at the splash itself, what modern bank fraud even looks like today. Then, we'll trace that first ripple out to the deeply human cost. The second ripple will show us how it literally squeezes the credit out of the system for businesses. From there, the widest ripple reveals the shockwave it sends through the whole economy. And finally, we'll see what on earth is being done to calm these troubled waters. Okay, so let's start with that initial splash. What exactly are we dealing with here? Well, it turns out modern bank fraud is kind of like a war being fought on two totally different fronts. On one side, you've got these huge, large-scale corporate frauds. Think about the infamous Punjab National Bank scam, a mind-boggling 13,000 crore rupees siphoned off using these incredibly complex networks of shell companies. But then, on the other side, you have this rising tide of high-volume online fraud. We are talking about a massive 206% jump in digital crimes. You know, the phishing emails, the UPI scams that are hitting millions of regular people every single day. One is like a surgical strike. The other is like carpet bombing. Both are absolutely devastating. Now, I just mentioned shell companies, and we hear that term all the time with these big scams. So what are they, really? Well, you can think of them as financial ghosts. They're companies that only exist on paper. They have no real office, no real operations, no real assets. And that's what makes them the perfect tool for fraudsters. They're a disguise, hiding who really owns the money and making it almost impossible to trace. It's exactly why they were at the center of the Nirav Modi scam. And all of this brings us to our first ripple, because the damage from fraud, it goes so much deeper than just a number on a balance sheet. It's about the very real and often invisible impact it has on people's lives. This quote from the International Journal for Multidisciplinary Research just nails it. The researchers are basically saying, hey, we have to stop looking at this as just a money problem. It's a mental health crisis. And that really highlights this hidden cost we almost never talk about. It's not just an attack on your bank account, it's an attack on your sense of safety, on your well-being. And there's data to back this up big time. That same study found that people who've been victims of online financial fraud report way higher levels of depression, anxiety, and even post-traumatic stress disorder, PTSD. I mean, these aren't just feelings of being annoyed or frustrated. This is measurable psychological harm. It's on par with the trauma people experience from other terrible crimes. So think about the knock-on effect of all that psychological damage. It just shatters trust. When people get scammed online, they lose faith in the digital banking and payment systems that our entire modern economy is built on. And that can actually slow down financial progress and make people afraid to participate in the digital world, which at the end of the day has consequences for all of us. Now, that loss of confidence isn't just felt by individuals. Oh no, it sends another powerful ripple through the financial system. And this one leads to a credit squeeze that can literally starve businesses of the money they need to survive and grow. So, here's what happens inside the banks. After a massive scam hits the news, a culture of fear just takes over. Staff get demoralized, and bankers, terrified of being blamed for the next mistake, become super risk-averse. Procedures get incredibly rigid, and the whole process of lending money just slows to a crawl, as everyone inside is focused on damage control. And who gets hit the hardest by all this? It's the small and medium enterprises, the MSMEs. Lending just dries up. The banks get completely preoccupied with their own internal housekeeping. And perfectly good, legitimate businesses, especially the smaller ones that really rely on public sector banks for loans, are just left out in the cold. This credit crunch often hits them at the worst possible time too, like when they're trying to recover from other economic shocks. So, we've gone from the individual to the small business, and now the ripple widens to its furthest point, the entire national economy. This is where you see the combined damage, the real shockwave. Okay, this is where the story gets really, really powerful. A study looking at the big picture economic impacts of bank fraud found this clear and, frankly, disturbing long-term relationship. Look at the graph. As the amount of bank fraud, that's the green line, goes up, GDP growth, the blue line, tends to fall. And at the exact same time, inflation, the red line, tends to go up. It is a toxic, toxic mix for any economy. And just to be clear, this isn't some random coincidence. The research confirms it. Widespread bank fraud has a direct, measurable effect on economic growth and the prices we all pay. It's like a secret tax on the whole country's prosperity. And the stakes here could not be higher. This quote from the same research just lays it all out. Unchecked financial crime doesn't just hurt the economy, it damages its very integrity and stability. At its absolute worst, it can lead to social unrest and political upheaval. That is the ultimate cost. So when you're facing a force this destructive, what can actually be done to calm the waters? Well, that brings us to our last section, the ongoing uphill battle to fix the system and fight back. So how do we fight back? Well, experts suggest a three-pronged attack. First, we've got to get way smarter with technology, using AI-powered systems to automatically scan transactions and flag anything that looks fishy. Second, we need a whole new financial setup, specifically designed to protect small and medium businesses so they don't get left vulnerable when a crisis hits. And third, because this is a global problem, working with international agencies is absolutely critical to track down these cross-border schemes. But, let's be real. This is an uphill battle. Trying to enforce the rules faces some serious, stubborn challenges. The legal system can be painfully slow. You've got multiple agencies, like the Securities and Exchange Board of India and the Enforcement Directorate, whose powers sometimes overlap, creating a bureaucratic mess. All the while, the fraudsters are getting more and more sophisticated with tech, using things like encryption to cover their tracks. And, in some of the really big cases, political interference can mess up the investigation. And that leaves us with this final, crucial question. Fraud is constantly changing, adapting to new technology at lightning speed. The challenge for everyone, for regulators, for banks, and for all of us, is whether our systems, our laws, our technology can possibly evolve fast enough to stay one step ahead. The answer to that question is going to determine the stability and the integrity of our economy for years to come.